Hey folks, welcome to spring. This is Doc's Market Minute for Monday, March 21st. Let's talk about the market's character for a minute now. So a lot of people, if we look in the daily chart, a lot of people are just getting jerked back and forth on this market where we seem to be going quietly from range contraction to all of a sudden, bam, range expansion. And then we go into range contraction again, and then boom, range expansion. Range contraction, range expansion. Range contraction, boom, range expansion. So we're just going back and forth between range expansion, range contraction, but we have huge range for this. Big range and big candles, which is going on. So these are all hallmarks of a bear market or a corrective market. So obviously after a rally like this, we've seen more than 13% off of the bottom. A lot of questions are out there saying, okay, is the bull back? And this is very typical to go through this in a bear market or a corrective market where every rally seems like, okay, this is the one, and then everybody's maximally disappointed again as the price pulls down. But I don't want to be so blind to that and put myself in a frame of mind where I don't see any upside breakout, a sustained upside breakout. After all, if central banks around the world decide that they want to make the market go higher, regardless of what the downside consequences are later on, they can certainly do that. They've proved that they can do that for the last few years. So what I want you to watch for is a couple of things. Now, if we look at just the daily chart here, we can see that what we're seeing is very typical behavior for this. Very strong off the bottom, and then we kind of got to an exhaustion point here where we went sideways for a number of days. But you'll start to see this very typical breakout sideways, breakout sideways, stair-stepping type of price action. And what that will also be accompanied by is, as we look at the daily chart of the futures, this will be also accompanied by a much lower average true range. So we'll see an average true range which goes below 20 and stays there for a long time. So typically we are going to see these ATRs that are 50, 60 points on the S&Ps during times of really heavy corrective action. But if this market actually does recover and starts going higher, then we will see the ATR probably dive down here. We'll probably see it somewhere in the teens as we'll get into that very characteristic breakout sideways, stair-stepping price action. The other thing that I do want to bring up, and this is particularly important during these times, is we have the oscillator traders are out there going, hey, the market cannot go higher. It's against a trend line, or the market cannot go higher because it's into overbought territory. Trust me, neither of those things really matters when we see markets doing this sort of thing. Did it really matter that the market was overbought back here? No, it didn't matter. It just kept on going. What is overbought can remain more overbought over time. And what I've also seen is the trend lines, things like this, when we have a rising wedge pattern and the price is kind of bouncing around inside a rising wedge pattern. Rising wedge patterns are supposed to break to the downside. Rising patterns break to the downside, and descending patterns are supposed to break to the upside. That's the way that technical analysis was written all those years ago. But what we're finding is that we'll typically get at least one final push to the upside where everybody chases after that. So a rising wedge will actually break out to the upside. And the same thing will happen on a declining wedge. On a descending wedge, will usually drop to the downside first before it will recover. So we need to see these capitulation points both to the upside and to the downside before we see this actually happen. But a rising pattern eventually at some point is going to get broken to the downside, but not usually before everybody chases after it, thinking that this is the very last rally that they'll ever see. So do yourself a favor during times like this. We're at a very important inflection point here where the market literally could go anywhere. We could see it go much higher from here. We could see it go through the same thing as November, December and drop like a stone from here, 15%. Any scenario, I can envision any scenario from here working. Depends a lot on what central banks really want to do. If they really want to push things higher and turn their region of the world into another Argentina or Venezuela, it can certainly happen. So my point in today's video is to watch the character of the market. The character of the market and the price action and the trends will keep you on the correct side of where things are going and away from letting your emotions take the wrong path for this. Thanks for listening, folks. We'll see you tomorrow.